Well, that's Sanjeev Goenka there. The rupee remains on a tight leash against the dollar as it continues to hover below the 84 mark. The 10-year bond yield hitting the lowest level in 2 years thanks to demand from domestic banks. Overnight, the government excluded any new issue of 14-year and 30-year bonds from fully accessible route for foreign investors. Sapna is here with more on the government's decision and the rationale behind it. Sapna.
I think the intent of the government of India is very clear that they would like to send a signal to the foreign portfolio investors in terms of being able to manage the inflows from the perspective of the Indian economy. So do it at the inflow stage rather than act at the outflow stage, because there's a risk of FPIs beating a hasty retreat or moving out a lot of money at a very fast clip, and that can have an impact on the Indian economy as a whole. So to ring fence the harmful impacts to the economy of FPIs doing so, sending a signal, and also then putting this out as a mechanism or as a framework for the future, where if required, maybe some more bonds can be pulled out of the fully accessible route as far as the FPI money, incoming money into the bonds is concerned. So this is probably a start, and this is a signal that the government of India wants to send to the FPIs very clearly. GOI doesn't want to act at the outflow stage because that may be too late, so to speak. Inflows is what matters, and inflows is what they're going to watch out for, and this is a signal that they have sent to the FPIs.